On any given day, you can bet your bottom dollar that Michael Saylor is out there somewhere buying more Bitcoin. You've seen him in videos. You've caught him in interviews, outsmarting folks with his big brains. But who exactly is Michael Saylor? And what does his company, MicroStrategy, actually do other than buying Bitcoin as one of the biggest corporate bets in history? Uncle Mike's story is one of many highs, a lot of lows, and relentless conviction. Saylor's journey takes us back to 1983 when he was at MIT, where he pursued not one, but 2 degrees, aeronautics and astronautics, combined with science, technology, and society. Even then, his mind was drawn to big systems thinking, the kind of vision that one day would lead him to Bitcoin. At just 24, Saylor became one of the youngest billionaires in the world. In 98, his stake in MicroStrategy actually pushed his net worth past $7 billion as the company rode the heights of the dot-com boom. Today, $7 billion might sound like pocket change compared to today's giants. But back then, that was serious money. Bill Gates was the richest man in the world at $51 billion at the time, and Jeff Bezos was still climbing with a measly $1.6 billion to his name. I know, it's still a ridiculous amount of money. I'm just saying, compared to today, Elon Musk with almost $500 billion in net worth, $7 billion pales in comparison. But then the year 2000 came along, and this happened. His company MicroStrategy faced investigations for accounting missteps. It was one fateful day when Saylor lost $6 billion in a single trading session, which is one of the largest personal financial losses ever recorded. I guess they didn't have enough friends at the SEC, huh, Gary? Honestly, if I lost $6 billion, I wouldn't know what to do with myself. But Saylor is not Valery Yoshi. He didn't quit. He didn't give up. He didn't relent. Instead, he shifted focus. In 2012, he published The Mobile Wave, which would go on to become a bestseller. The book is about how mobile technology would reshape industries and societies. This wasn't just a book. It turned out to be a blueprint and a glimpse of Saylor's shift toward future tech investments. By 2020, just a few years ago, inflation fears were looming and MicroStrategy wasn't exactly thriving. Growth had stalled. The company's stock value was underperforming. So this is when Saylor saw Bitcoin not just as a hedge, but as a lifeline to revitalize his company. That's why MicroStrategy shocked everyone, and I mean everyone, when it announced that it had converted $250 million of its cash reserves into Bitcoin. Traditional markets thought it was reckless. It was insane to do this. But Michael's rationale was simple. You don't have to invest all your money in Bitcoin, just the money you want to keep. That first Bitcoin buy wasn't a one-off gamble either. MicroStrategy began sweeping every dip and stacking relentlessly. As Bitcoin's price fluctuated, Saylor got even more aggressive. He did this by issuing convertible debt and raising over $2 billion to fund even more Bitcoin purchases. By 2022, MicroStrategy held over 150,000 BTC, becoming the largest corporate holder of Bitcoin. That same year, Saylor stepped down as CEO, transitioning to executive chairman to dedicate his focus entirely on how to buy more Bitcoin. And if you don't think that's crazy enough, here's where it gets even crazier. Despite the skepticism that he and MicroStrategy as a company had to tolerate for a long time, the company's stock skyrocketed, tracking closely with Bitcoin's price movements. And just recently, like a couple weeks ago, as of shooting this video, MicroStrategy hit another milestone. It joined the NASDAQ 100. Let's think about that for a second. A company once on the brink of irrelevance is now rubbing shoulders with tech giants, driven almost entirely by a Bitcoin-first strategy. A week ago, I didn't even know what MicroStrategy did other than buying Bitcoin. As Bitcoin's loudest corporate bull, Michael Saylor's media presence has also exploded. His analogies have made headlines far beyond just the crypto community. He's always on the news. He's always sharing interesting metaphors and quips about Bitcoin. Here are just a few examples.
Whoever gets the most Bitcoin wins. Bitcoin is the end game for for anybody that wants to own the greatest property in the 21st century.
Well, I guess that is the case, but is there a price at which you would consider selling some of the Bitcoin, pulling out? So, I mean, because you can do something with New York City. You can live in New York City. You can have a business in New York City. What do you do with the Bitcoin besides it just gather value?
Well, the real estate developers in New York City, they're not buying the real estate because they want to live in it. They're buying the real estate because they expect
because they want to sell it eventually, Michael. I mean, let's be honest. Most of the people who are, yes, sure, some people pass it on to their children, but like most of the people who are buying assets at some point want to sell the assets at a profit. So let
me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor. Okay. Anybody that's rich in the world, they own property. They own large swathes of land. The royal family of England, it didn't sell all of its property in central London in order to buy, currency or paper money. Nor did the royal family of Japan. Nor did the royal family in the Middle East. In fact, they want to own the property forever. I want you to imagine Bitcoin is. It's a city in cyberspace that's 276 blocks wide, 276 blocks high, 276 blocks deep, about 21 million blocks. Now imagine all 8 billion people in the world want to live there one day. They want to put their capital there. There's $900 trillion of wealth in the world. As people migrate from every other form of property and they've assets into cyberspace, you're going to see the Bitcoin network go from a $1 trillion network to a 10x that to 100x that. And there really is nowhere else to go. It is the apex property of the human race. Money is socio-economic energy. Money is monetary energy, or it's the energy, the backhaul energy that we use to trade with. So the problem with currencies in the history of time is the trust in the issuer. You're trusting an individual, right? You're either trusting a banker, a JP Morgan, or you're trusting a family, the Rothschilds, or you're trusting a king or a prince, or you're trusting a mayor, or you're trusting a government. As a practical matter, the best inflation rate for an investor, or for anybody that wants to stay wealthy or be wealthy, if you're concerned about maintaining your economic purchasing power, it's the monetary inflation rate, the rate at which the supply of money is expanding. The supply of money expanded maybe 10% for a decade before COVID, and the S&P went up 10% a year. It's a phenomenon whereby a government authority prints more currency. And why do they print more currency? Because if I want to pay $1 trillion bill, I either have to tax you $1 trillion or I have to print $1 trillion of money. Turns out that it's a lot easier to print money than it is to tax people. And so it's either inflation or taxation. If you save every penny in 10 years, you'll be able to buy 1/4 of what you could have bought today, because the price of housing is going up at 20% a year, and you're just not ever going to catch up, right? Because you're getting paid in currency. It's like the oxygen is getting sucked out of the room. So Tucker, if I told you the oxygen is getting sucked out of the room and there's an oxygen mask drops out of the ceiling over there, what would you do?
Run for it.
Yeah, put the oxygen mask on. Bitcoin is the oxygen mask, and energy is life. And if I keep sucking the energy out of the economy, I'm sucking the oxygen out of your system. Either under the best case, you perform poorly. Under the worst case, I suffocate you to death or freeze you to death.
And when a few folks pressed him about diversifying into altcoins or NFTs, his response became iconic.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There's no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? Right? There's no second best, okay?
Beyond the metaphors, Saylor's leaned into Bitcoin's meme culture.
The classic Bitcoiner response is, oh, yeah, my Bitcoin, I lost it in a boating accident. You ever heard that phrase? It's kind of a trope, but what it means is, at the end of the day, if you push me too far, I lost it, it's gone, sorry.
it. You're right.
Tax that.
It's a playful nod to the crypto community's obsession with privacy and asset protection. Saylor's career mirrors the crypto markets. From soaring to meteoric heights, to crashing and being down bad, only to rise again. His story is a testament of conviction, risk-taking, and relentless belief in disruptive technology. He's a firm believer in investing in networks, and this is the first money network that is completely decentralized and out of anyone's hands but ours. In the meantime, MicroStrategy keeps accumulating Bitcoin and owns more than 2% of the entire supply, reinforcing his belief that Bitcoin isn't just the future, it's happening right now. Did you enjoy this episode of Degen Reports? Then give us a like and subscribe for more stories from crypto. I'm your host Valeri Yoshi, and you've been watching Degen Reports. Ciao.